In today's video, we're going to continue building the foundations on how the economy fits into your mind and building that picture around it. So this is part 2 of our video series here. Hello and welcome to another ACY Securities market tutorial. My name is Alistair Schultz and I'm going to be a host through today's trading journey. In today's video, like I said before, we are going to be having a look at what goes on within an economy, more targeted specifically down to one. And we're going to try and help you build that picture in your head. Naturally, there will be more work to be done and more reading to understand, but this is going to be a good starting point for you to start working your way through how economies work. The economy we are going to be looking at today is Australia. This is my native homeland and it is one that I know quite well. But if you are from Australia, this is probably the best place for you to start. But if it isn't, it's still a good place for you to have a look to start building some of those understandings and formulate that picture in your mind about what the economy does. Now, the first thing that we always want to look at when it comes to these things is the gross domestic product. Now, we have our current GDP here as a nominal level at $1.3 trillion, and we have our current GDP in a power parity sort of side of things being $1.36 trillion. Now, to keep in mind when it comes to the triple P rating, Australia is actually above the UK, Canada, Germany, France, and on the per capita side of things. So that is something to keep in mind, and it is interesting to say the least when it comes to the amount of people living in the country and the amount of income that goes towards them. Now, the next thing to sort of really think about is what is purchasing power of parity, and why do we focus on this a little bit more than nominal GDP? The reason behind it is it's actually an economic term for measuring the prices of goods in different countries. Now, you may have heard of the Big Mac Index, which is a little bit of a benchmark for triple P. And it shows the disparities in purchasing power, or it's sometimes known as Bergonomics. But regardless of that, what really goes on behind the scenes is it's a concept of that the goods itself do not change in value. And so therefore, to give you a bit of an example, let's say a computer in America was worth $500, and that very same computer was worth $2,000 in Hong Kong. Then that indicates that the good itself, the computer itself, hasn't changed in value, but the value of the currency has. So therefore, the Hong Kong side is 4 times as weak as the US dollar, or vis-a-vis the other way around. So it is just a way of measuring the goods themselves versus the power of the currency or the value of that currency. And it is something that we do keep an eye on. So triple P is one of the things that you should be looking at more than nominal GDP, though both are very important. Now, the next one to have a look is some quick take macros here. I'm not going to go through all of these in depth. I am just giving you a bit of an idea on what we're really looking at. So for Australia, by sector, we have agriculture, industry, and of course services. And when that sort of goes in, that's what we're building into what makes up our GDP as a whole. The GDP growth rate is minus 6.7% as of 2020. Naturally, COVID-19 has affected that, and we would really have to look at what's gone on in 2019 for a better average of how that might be growing. The inflation rate from 2019 suggests a 1.3 to 1.4% inflation rate. And now that sort of starts to fit in with how much we pay for goods again, and whether we're going to see an influx or deflux, regardless of the sort of situation, really makes no difference. It's just about how it fits into the economy and what's really going on around behind the scenes. The next one is the actual interest rate. So right now it's 0.25% here in Australia. It was 1% at the beginning of the year, but we had some emergency cuts due to the COVID-19 pandemic. Now, regardless of that, go and have a look at some of these things. Look them up. Try and work out what's going on and try and build that picture in your head. That's going to be the important part here. That's the whole concept of why we think about economies and how we actually think about when we might see changes in price. Now, the next one is, who do they trade with? Now, Australia has got a dominant side of trading. China has 32.6% of our exports and 19.4% of our imports. So that does leave us in a little bit of a situation where it means that we are restricted, or not so much restricted, but dependent on one country for trade. Now, there are other trading partners, and you always want to sort of know who the top 5 or 6 are. In Australia's instance, as you can see behind me, we have China, we have the US, Japan, Germany, Thailand, and the UK for our import side. And on exports, it's much the same, except we have South Korea replacing Thailand, and we also have India replacing the UK. So we do have a little bit of differences between what we export and what we import and who they are too. But what really matters is how much money you're actually getting in, because imports naturally end up becoming a bit of a liability, whilst exports are the ones that actually bring money into the economy. So the first thing to really take into account here is, what does Australia really trade? I've listed here the top 10 exports and the top 5 imports. Now, import side of things really do focus around what the consumer needs on the level. But for exports for us, it's actually quite interesting that we do tend to have a mineralized sort of approach, with iron ore and coal being the first two largest exports that we have, with a large portion of that going to China, obviously. And in addition to this, education. Education is one of the largest contributed industries to our GDP in Australia. It allows for a lot of international students to study, and of which there is usually a markup on price because you're not a citizen. But regardless of that, there are a variety of other impacts here when it comes from the other commodities. Natural gas, we've got gold, aluminium, beef being red meat, and of course crude petroleum, copper, and other meats such as poultry and pork. Now, all of these do get exported. So if we do see something that changes a little bit here in pricing, perhaps we have an epidemic like we have right now with COVID-19, and it reduces the amount of people purchasing these products for exports. It might also mean that if we do get someone else who has it cheaper or decides to enter the game with the export market and as a competitor, that we have issues. Or the other side of this could be that someone gets left out of the game and all of a sudden Australia gets to fill a void, such as what is going on right now with iron ore. So there are a variety of instances on the export side that really do contribute towards our GDP. And these are just some of the factors that we're always going to try and keep an eye on. Now, I'm hoping that this has sort of helped you be a little bit formative around your mental picture of what goes on within the Australian economy. And of course, there will be more to come. But please do some of your own reading. Try and build that picture. It does take a little bit of understanding and working around. Unfortunately, I can paint the picture as best I can, but I can't help you understand everything. So this is going to take a little bit on you. But regardless of that, I hope you have enjoyed today's video. And of course, if you want to get in contact with me, perhaps you have a question about today's video or the previous ones that I've done, then please send me an email at talktoal@acy.com. And don't forget to like and subscribe this video so you can get more great content and more understandings about economies from me and ACY Securities in the future. Have a great trading day ahead.